Here we are in the second quarter of 2021, and steel and construction material prices in general are still skyrocketing all over the United States. Adam Mazzella from Sheffield Metals is back with me today. We've got an update for you on the steel market, 2021, quarter two. What's up, guys? Welcome to the Metal Roofing channel. Welcome to Q&A Mondays. Today we are talking about the steel market, providing an update for you guys coming into the second quarter here in 2021. All the questions that we discussed today are in the description down below. You can jump ahead using those quick links. And if you're new here to the Metal Roofing channel, make sure you subscribe and hit that notification bell. We release metal roofing and metal construction content every Monday and Wednesday. Today I have Adam Mazzella back with me from Sheffield Metals. And we're going to talk a little bit about the steel market and really construction materials in general. Adam, a lot has changed since February. We're still seeing high prices, very high prices, short supply. Tell me what has changed since February.
Yeah, well, I think really what we've seen is a lot of the indexes continuing to climb. The CRU, you're seeing scrap input prices continuing to rise. You're still seeing demand really at highs, while supply has really not helped. There's been some planned outages with mills. There's been some unplanned outages with mills, with really little to no capacity coming online. I think what we're looking at today, late May, I think we're anticipating some capacity coming online this summer. However, those are brand new steel mills. So it's not like we've got some old blast furnaces that we're just planning on firing up. These were planned builds really from the last 3 to 5 years that the domestic steel industry really put together. And these are really some of the benefits that we're starting to see as a byproduct of 232 and the domestic steel industry reinvesting into itself. What's changed? Certainly the price. Like I mentioned, a lot of these indexes are up. We were kind of relating everything back to August of 2020 last year. So if we're looking at kind of August of 2020 being the bottom or the low, we're anticipating July prices being upwards of 140% above August of last year. So that is just bare galvalume coated steel products. Staggering number, so I don't think that we can sit here and say, oh, the steel mills are just trying to choke off supply. I think there's an element of nobody knows kind of what this market is going to do.
So the pricing that we've seen and the supply issues is not just the United States problem. It really has global implications. Talk to me about that.
Sure. So a lot of the prices that we see in the United States may be a little bit more significant in the United States. However, there's a few things that go into that. Section 232, which was something that the government enacted really to protect the domestic steel industry. I really don't want to get into the political nature of it, but what we've really seen domestically is domestic mills reinvesting into newer technologies that are going to be viable on a global level for years to come. The flip side of that is we in the United States don't really have access to the same typical supply that you'd have. A lot of countries, as a byproduct of Section 232, are really limited in what they could send America. So there's like quota systems on what they could send here. They're oftentimes hit with tariffs of like 25% or more. There's some good, some bad. I think a lot of what's kind of going on is, if you haven't figured out how to do business and you're a steel company in the last, 3 or 4 years, I think there's other things at play. So I don't know that 232 has really changed anything other than, in the United States, we're really feeling, I think, the impact of a lot of the squeezes as a byproduct of an economy trying to come out of a pandemic where they just shut everything down. There's a lot of issues with the supply chain right now. So everything costs more as a byproduct of lack of availability. Supply chains are choked. Flood the economy with cash, and everything's going to go up in price. So there's a number of things going on that, you can say Some have some precedents, others don't. We've seen inflation, maybe not in years of my lifetime like this, but we have seen extreme inflation before. We have seen capacity extremely tight, particularly in the metal roofing product line. Flat rolled has been a product that has been near capacity for years. I mean, probably greater than most, really, as a byproduct of the domestic construction markets and auto manufacturing and light gauge consumers like Sheffield Metals. We've seen things like that kind of squeezing it. I think some of the things that are kind of unprecedented really could be contributed to, the dollar not being as, your dollar today doesn't go nearly as far as your dollar a year ago. So the more money in the economy, the more expensive things are going to get. And then probably the biggest contributor to a lot of the supply chain challenges and issues are we turned off an economy. And, that has ramifications going back to supply chains in Asia, Europe, and certainly domestically in Mexico and Canada. Some of these contributing economies are still in shutdown mode. So when you're looking at it, it's really tough to say, hey, this one thing is really contributing to it. Things around the chip shortage, you hear things like that. You hear about steel and aluminum and all raw input costs going up. Absolutely. There's a lot of contributing factors that are going into all of this. I think the hope of many industries is that these increases don't become crippling. So I think we're still kind of waiting for the other shoe to drop to see where it all really goes, but that's kind of where it's at.
So what do you tell your customers? Are there ways around what we're seeing right now? Is there anything that we can do?
So, I think the common thing that we just need to be communicating to our customers, people downstream, is that prices that we're seeing on bare material coming in through July 2021 are still on the rise. Price increases are not done yet. Those will continue to go up really over at least the next 60 to 90 days or so. We should have a couple more increases. We're seeing increases on input costs such as paint. We're seeing increases on input costs such as the freight. So, the bare steel coil starts at a steel mill. It's got to go to a paint line. Then it's got to go from a paint line to a Sheffield Metals location. Then we have to process that metal, and then it's got to go to the customer. All of that costs more expensive. Just moving it is probably 20 to 40% more expensive than it was a year ago. So just looking at all of these additional costs, these are all kind of things putting pressure on it. Message to, really consumers and our customers, prices are going to continue to rise. We want to make sure our customers are insulated or protected in that they're not absorbing this. I mean, these are strictly price increases that we are passing along. And just need to be cognizant of that to protect themselves in bidding projects and make sure you're putting exceptions and allowances for increases and escalation clauses into your contracts. So
now you're saying that there's a couple more price increases that's going to be coming down the line the next couple months, but does that mean that, eventually we're going to get to a spot where we're running into a cliff with these steel prices? Is there going to be a bubble that bursts? What do we see?
I mentioned last time that, I don't know that anyone really has a crystal ball. There are some analysts predicting a cliff or a steel bubble. I think some things kind of guarding against that really could be that Section 232. With Section 232 intact, capacity kind of is what it is domestically. If 232 went away tomorrow, it would still take some time for import steel to get here. The floodgates wouldn't open. However, you'd see prices drop pretty significantly over probably a 2, 3, 4, 5 month period. I still don't see prices, even if there is a steel cliff, I don't see the prices dropping to where they were really when these increases started in August of 2020. If there's a bubble, if there's a cliff, I kind of look at it like this. In 2008, 2009, something very similar happened as far as price of steel just shooting up over a handful of months' time, similar to this. As quickly as that price went up, it probably collapsed every bit as fast or even faster. I think the difference is nobody kind of knew how quickly or how far it was going to go. So a lot of people were just buying and buying and buying, increasing their inventories because you got to have steel to run a business if you're a steel business. So buying and buying and buying, and then the bottom just fell out. A lot of people in our position and similar type companies, they can't buy enough to support the current business that they have anyways. I mean, there's a lot of business that really can't be supported out there right now. And so if you can't get the regular inventory that you have to run your business, and let's say the rug gets pulled out from underneath, of the price, and you'd, potentially be stuck with a really high cost inventory. You could, but I don't imagine it would be the same problem that we had back in the 2009 timeframe. So when we talk about a bubble, when we talk about, a steel cliff, sure, the price could drop. I think it really just depends on how much demand is in the economy, when that occurs. So we're seeing it's still pretty strong construction demand. We're still seeing a fairly strong economic outlook. A lot of things depend on where the interest rates go. If we continue to pump cash into the economy, things are going to continue to increase in price, not just steel and aluminum and things like that. So just kind of things to keep an eye on is how much more money is getting put into the economy, how much demand is in the economy, and then other things to kind of think of is what sort of products are getting choked off right now as a byproduct of other shortages, other things rising dramatically in price. The chip shortage has significantly hurt a lot of automotive manufacturers. Well, automotive manufacturers are huge consumers of steel. If they're not buying as much steel, that means more steel would be technically available in the rest of the economy. If the rest of the economy isn't there to say, yes, we'll take that on, you're going to see, like I said, this other capacity coming on, and that could see the price drop pretty significantly. As long as demand is there in the metal construction world, I think you'll see companies like us positioned to be able to supply customers, hopefully bring a softer landing to these price increases as things begin to stabilize, and help balance out the volatility that a lot of our customers are experiencing in this market.
So we've talked about capacity, we talked about new steel mills coming online, we talked about the implications of Section 232. What could cause the price to drop? Is it possible for the market to get flooded with steel? Tell me about that.
I don't think the market can get really flooded with steel. If it were to, I think it would be fairly gradual. Even the new capacity coming on, the new capacity are these newer mills, these electric arc furnaces. Even these electric arc furnaces are paying a substantial amount more for scrap. I mean, we're getting about 180% more for our scrap today than we were, this time last year. So you need a lot of scrap and pig iron and things like that to run these mills. A lot of supply chains are kind of in shambles as far as being able to get pig iron from places. So the alternative really is scrap, and scrap is way up. So even the new capacity is going to be relatively expensive comparatively, and anything abrupt with 232 is going to be a relatively soft landing, I'd imagine. Yeah, you'll see some immediate things and shocks to the market, but we're not going to see something like 40 cents drop in cost overnight. I would hope that July is the high, or July is the peak. And where we go from there, I'm not really 100%, but we're following the market every bit as close as anybody out there. So,
all right. Well, thank you very much, Adam. A couple key takeaways are looking at a couple price increases still in the next couple months, but make sure you subscribe here. We'll be coming at you with more updates for the steel market here in 2021. Comment down below if you have any questions. We'll answer them in the next video. Anything else? Check us out, SheffieldMetals.com. And as always, I'm Thad Barnett, and we'll catch you next time.